Steve Sosnick here with today's Interactive Brokers midday market update for Tuesday, June 1st, 2021. Welcome to the new month. We had a fairly lackluster one last month when you look at the final results, but there were some wild moves in between on the major stock indices. And of course, if you were into the real speculative stuff like Bitcoin or meme stocks, you actually had a pretty wild month. So it depends what your point of view is. As we get into the new month today, we saw, I think, what I'm going to call enthusiasm on the new month rally. There's sort of an old adage, and I haven't tried to prove it or disprove it in a while, but there was, the old Trader's Almanac thing, which was stocks tend to do well at the beginning of a new month, and so it had been a good time to invest in them, which struck me as kind of interesting this morning to see us open so strongly after being essentially lackluster all weekend. As we're taping this now, a little after 10 o'clock Eastern Time US, we've given back almost 2/3 of those initial gains. And so I think I think there was some of the enthusiasm might have been misplaced. This promises to be an interesting week, although it's a short one, because we have the monthly employment numbers on Friday. Those always prove to be interesting, and right now I think the market is going to look to those very carefully for signs of labor market inflation, and to see whether there's slack in the labor force, to see whether we're approaching the full employment that the Fed is really looking for, and what the pace of that is, and how much inflation is required to get to that level. So that's going to be fairly key. In terms of other market catalysts, we have OPEC meeting today. That certainly got oil prices juiced up early. We saw some rises in agricultural commodities as well. I think just more sympathetically, with money flowing back to commodities with sort of a general inflationary theme. We saw Tesla say that raw material prices are going to cut into their bottom line, making Teslas more expensive. This is going to be a theme, folks, and I think a lot of what we see will be really hinging upon the inflationary trends or not. Is inflation transitory? Will be a big question. I think other things that I've been keeping an eye on, and if you've been reading and watching the videos, you'll know about them, but just time to check back a little bit. I did talk yesterday at length on Bloomberg about what I would call meme rotation, which you guys saw mentioned on Friday. Last Thursday I wrote about that. And my theory there is that in its own way, the most speculative assets are their own asset class. And so you have Bitcoin and AMC and some of the other meme stocks competing almost as their own asset class, and people rotate between one speculative name to another. It's analogous to institutional investors chasing alpha, which is sort of the buzzword speak for absolute returns greater than the index. In this case, I don't think they're worried about benchmarking to anything other than, are we making money or not? And I think with some of the enthusiasm having left Bitcoin, one thing, by the way, it was the first weekend in 4 where we did not go down 10%, so that was a good thing if you're a Bitcoin holder. But AMC has attracted, I guess, most of the attention. I even saw tweets today from their CEO sort of taking a victory lap, so to speak. It's kind of an interesting thing because in some of these stocks where you get into the real troubled stocks, especially when you start to distort it with social media messaging, that things that might be taken as bad news are taken as good news. Today's proximate cause for AMC's pre-market rise was that they placed a big slug of stock with an institutional holder. In a normal company, that would be considered dilution. In a company that where the bonds are still trading at very, very high interest rates, indicating that the market, let's call them more sober investors, the bond investors still see some potential for economic distress. That's actually probably good news because they raise some permanent capital. And so you get into some weird circularity. Someone asked me, why is AMC outperforming GameStop? And I do think some of it has to do with the fact that it's cheaper, it's smaller. It takes it takes more to move GameStop than it does to move AMC. You don't have the immense short interest in GameStop that you had previously. That would, that really provided what I'm going to call giant institutional caliber buying. So it kind of has to do it on its own in terms of meme land. And the bigger the stock, the harder it is to move. The more money it takes to move it. And I think that's why you saw what I'm going to call some of the lesser meme stocks outperforming the granddaddy of all the meme stocks, which would be GameStop. And that's even after GameStop, put out a press release, which was, I think, the mother of all memes, saying that they were going to look into NFTs and a blockchain type, Ethernet type blockchain. This wraps them all up in one. And I think that's kind of what you get into. So looking forward to the week, we'll see where it goes. I mean, there's definitely catalysts, but they tend to be a little bit further out. We'll see where the market goes on its own volition. We'll see if this first of the month thing holds up today. Otherwise, have yourself a great day, and we'll talk soon. Take care. Bye-bye.